Expectation is a dangerous companion in the markets because it whispers promises the market has never made. Traders sabotage themselves not by what they see on the chart, but by what they secretly expect the chart to become. I learned this the hard way, long before anyone knew my name, when my confidence was built not on observation but on hope. Hope was the emotion that convinced me I deserved profits simply because I wanted them. Expectation was the voice that tried to predict what the market should do instead of what it was doing, and the market punished both with the same ruthless precision. The greatest danger in trading isn't loss. It's the belief that a trade owes you something, that a setup will fulfill its potential just because the logic behind it was sound. Traders expect the market to reward their analysis, their patience, their conviction, and their courage. But the market rewards none of these things. It rewards discipline. It rewards humility. It rewards acceptance. Expectation, on the other hand, blinds traders to the truth unfolding right in front of them. You enter a trade with a clean mind, but as soon as it moves in your favor, expectation creeps in. Suddenly, the modest target you planned isn't enough. You imagine what you'll do with the profits. You extend the move in your mind. You start anticipating outcomes that haven't happened. And in those moments, you stop trading the market and start trading your imagination. That shift, subtle, almost invisible, is where traders lose themselves, because once you attach yourself emotionally to a future outcome, everything in the present becomes distorted. I used to sit there and imagine what a trade would become. I'd picture a breakout running further, a reversal filling the entire range, a trend continuing indefinitely. The worst trades I ever held were not flawed setups, they were trades fueled by expectation. I wasn't reacting. I was hoping. I wasn't evaluating. I was fantasizing. And the market doesn't care about fantasies. When hope enters the trade, your stop loss becomes a suggestion instead of a rule. Your plan becomes optional. You watch a small loss because you expect a reversal. You watch a winning trade evaporate because you expect more. Expectation poisons everything it touches. A trader can survive fear. A trader can survive uncertainty, but a trader cannot survive hope, not the kind that overrides logic and observation. Hope in trading is not optimism. It is denial disguised as confidence. When a trade moves against you, hope tries to justify staying. When a winning trade slows down, hope convinces you to hold longer. When the market shifts, hope argues with reality. That is the danger. Hope makes you believe the market will bend to your wishes. But the market bends for no one. Many traders ask why they repeat the same mistakes, even after learning the rules. The reason is simple. Expectation becomes a habit. They expect to recover losses. They expect the next trade to be the one. They expect their strategy to work every time. And the more they expect, the less they observe. They stop treating the market like a living, changing environment and start treating it like a machine that owes them predictability. But trading is not predictable. It is a constant negotiation between discipline and temptation, between objective truth and subjective desire. To survive, a trader must become emotionally neutral, not cold, not robotic, but free from the grip of expectation. You must walk into every trade prepared for any outcome, profit, loss, continuation, reversal, and accept them all with the same calm neutrality. That is the mindset that keeps you alive in this game. Not hoping, not wishing, watching, responding, adapting. I always say this: successful trading is not about predicting what will happen. It is about aligning yourself with what is happening. And you cannot align yourself with the market if you're too busy expecting the market to align with you. Expectation turns traders into spectators with an emotional bias. Acceptance turns traders into professionals who act without hesitation. I want you to think about how many times your worst decisions came from expectation. How many times you moved your stop because you expected a bounce. How many times you refused to take profit because you expected continuation. How many times you doubled down because you expected redemption. These are not strategy errors, they are psychological errors born from the same root. Hope masquerading as certainty. A trade should never continue simply because you want it to. It should continue because the market confirms your thesis. If the market does not confirm, you must release your expectations immediately. This is where discipline becomes more than a habit, it becomes a survival instinct. And that's the difference between amateurs and seasoned traders. Amateurs cling, professionals let go. And before we continue into the deeper mechanics of expectation, how it grows, how it disguises itself, how it manipulates your judgment, I want to remind you that this lesson ties directly into some of our other videos. You've seen what we shared in the psychology of confidence, and how I explained that confidence must come from evidence, not emotion. You've also heard the message in Greed versus Patience, where the internal war shapes every decision you make. These videos are not isolated ideas, they are all pieces of the same psychological puzzle. If you haven't watched them, make sure you check them out, because they reinforce the foundation of everything we're about to explore. And before we transition into the next part of this video, take a moment to dive into our podcast playlist as well. We break these ideas down even further there, in ways that go deeper than the YouTube format allows. The podcast is where the real, unfiltered lessons unfold. And if you've been following this journey, you're going to gain a lot from it. Now, let's continue with the topic of the day. Expectation is dangerous not only because it blinds you, but because it quietly rewires the way you interpret information. Once you expect a certain outcome, every candle, every tick, every fluctuation begins to take on a new meaning. You start seeing what you want to see instead of what is actually happening. A minor pullback becomes just a pause before the move continues. A clear reversal becomes just noise before the breakout. Every signal is filtered through the lens of your emotional investment. And the moment your perception becomes biased, the market has already won. Traders think they control their decisions, but most decisions are made long before the chart forms. They are made in the mind, in the space where hope attaches itself to outcomes. When you place a trade with expectation, you create a personal story around it. That story defines how you interpret the market. You're no longer analyzing, you're defending a belief. You're no longer adjusting, you're justifying. And justification is the enemy of objectivity. I've seen traders hold a losing position while repeating, "It has to come back." That sentence alone reveals how expectation corrupts judgment. Nothing in the market has to do anything. The moment a trader believes it must, they have surrendered their discipline. Even worse is the expectation that the market will reward patience simply because you've suffered. Many traders hold a drawdown because they expect that if they endured the pain long enough, the market owes them relief. But your suffering does not obligate the market to move in your favor. The market does not reward pain. It rewards discipline. Expectation creates emotional attachment, and emotional attachment creates paralysis. You hesitate when you should exit. You hold when you should cut. You average down when you should admit you were wrong. This paralysis is subtle because it feels like conviction. That is the real trick of expectation. It disguises itself as strength. It makes you believe that holding on is courage. But holding on is only courage when the market justifies it. Every other time, it is denial. One of the most dangerous forms of expectation is the expectation of certainty. Traders want the market to be predictable. They want patterns to work every time. They want outcomes to be consistent. But consistency does not come from the chart. It comes from the trader. The market offers probabilities, not promises. The trader turns those probabilities into results through disciplined execution. Expectation tries to take probability and twist it into certainty. And once you believe you know what will happen, you stop managing what can happen. The moment you think a trade cannot fail is the moment you are most vulnerable. There was a time, early in my career, when I built a string of winning trades so clean and consistent that I began to believe I had discovered the secret rhythm of the senior market. I wasn't observing anymore, I was predicting. I placed trades expecting victory. I sized heavier, loosened my stops, and convinced myself that the market had become predictable. And for a short period, it rewarded me, which made the expectation even worse. I mistook luck for mastery. Then the tide shifted, as it always does, and I refused to accept it. Loss after loss mounted because I expected the reversal. I expected the bounce. I expected the market to return to the pattern I had fallen in love with. But the market didn't care what I expected. It only cared about my exposure. My expectations cost me far more than the losses ever should have. Expectation is the hidden architect of overconfidence. It convinces you that the market will behave in a certain way because it has behaved that way before. But the market is not a repeating machine. It is a living environment, and environments change. When expectation becomes your guiding force, you will always be late to the side. Shift. You will cling to old patterns long after they've stopped working. You will assume a trend continues long after it has ended. You will assume volatility calms down long after it has increased. Expectation freezes your mind in the past while the market moves into the future. But perhaps the most psychologically destructive expectation is the expectation of redemption. Traders who fall into drawdown often expect the next trade to fix everything. They believe one winner will erase the damage, restore confidence, and undo their mistakes. This is the expectation that fuels revenge trading, oversized positions, impulsive entries, and emotional decisions. Redemption is not a strategy. Redemption is a story your ego tells when it cannot accept responsibility. No trader collapses from a single error. They collapse from the emotional chain reaction that expectation triggers. One loss becomes a personal insult. One mistake becomes a threat to identity. One setback becomes a mission to prove something. The more you expect redemption, the further you drift from discipline. And discipline is the only true protection you have in this game. The only way to break the power of expectation is to shift your relationship with outcomes. You must treat every trade as a possibility, not a promise. You must stop needing the market to behave a certain way. You must release the future and anchor yourself in the present. The market does not owe you direction, but it always shows you intention if you're willing to see it. A trade should not make you hopeful. It should make you focused. Every candle should be evaluated, not interpreted emotionally. Every shift in structure should be accepted, not resisted. When you detach from expectation, you regain your ability to respond. You regain your ability to adapt. And adaptation is the true skill of every successful trader. Traders often ask me, how do I stay detached? The answer is simple but not easy. You must commit to the plan more than the outcome. A plan is objective. An outcome is emotional. When your loyalty is to the plan, you execute cleanly. When your loyalty is to the outcome, you begin to hope. This is why the discipline we teach in our other videos matters so deeply. Everything from why discipline beats strategy to greed versus patience reinforces this foundation. This new topic, expectation and hope, is not separate. It is the psychological root behind all the mistakes traders keep repeating. If you don't control expectation, the market will control you. And now that we've exposed how expectation manipulates your perception and emotions, in the next part we're going to explore how expectation affects behavior, pattern recognition, decision-making, and long-term consistency. We'll talk about the habits that keep traders stuck and the mindset shifts that separate professionals from dreamers. The real cost of expectation is not measured in money, it's measured in the habits it forms. A trader who expects outcomes begins to develop patterns rooted in emotional reflex, not strategic reasoning. And once habits take shape, they operate beneath awareness, quietly steering every action you take in the market. You may think you're making rational decisions, but behind them are the same expectations that have slowly shaped your reactions, your timing, your discipline, and even your tolerance for pain. One of the most destructive habits created by expectation is the habit of holding trades too long, not because the setup justifies it, but because the mind clings to the fantasy of what the trade could become. You tell yourself you're letting profits run, but deep down you're waiting for the market to reward your belief. You're waiting for confirmation of something you've already decided. This habit erases countless profits, because once hope guides your behavior, you too lose the ability to act with precision. Another habit is hesitation, an invisible killer. When you expect a market to reverse, or expect a trend to continue, or expect a breakout to happen, you stop responding quickly. Hesitation grows from the fear of being wrong, and the fear of being wrong grows from expectation. If you expect a specific outcome, taking action becomes emotionally risky. Exiting early feels like betrayal. Cutting losses feels like surrender. Taking profit feels premature. You hesitate not because you lack skill, but because expectation has created a mental story you're unwilling to break. I've seen traders freeze during the most obvious exit signals simply because they were waiting for the market to validate what they expected. They watched good trades turn into break-even trades, and break-even trades turn into losses, all because they expected the market to fulfill their narrative. The worst part is how believable those expectations feel in the moment. They don't feel like emotion. They feel like logic. They feel like reason. But the market exposes the truth. Logic built on expectation is nothing more than emotion disguised as analysis. Expectation also builds the habit of ignoring evidence. Traders will stare at a reversal pattern, unfolding candle by candle, and refuse to acknowledge it. They'll watch volatility change and pretend it's temporary. They'll hold positions even as the volume shifts against them. Expectation makes you see what you want to see and ignore what contradicts your internal story. This habit can destroy a trader faster than any single mistake. The unwillingness to accept new information becomes a form of self-sabotage. In my early years, I held on to losing trades purely because I was convinced the market would return to my entry. I ignored every sign telling me the trend was broken. I even added to positions because I expected the bounce. What I didn't realize was that I wasn't trading the market. I was defending my ego. When expectation becomes intertwined with identity, every market move feels personal. A loss feels like an insult. A reversal feels like betrayal. A drawdown feels like injustice. And once trading becomes emotional warfare, you have already lost. There's another subtle habit expectation creates, forcing trades that don't exist. When you expect the market to behave a certain way, you begin searching for confirmation where none exists. You take setups that don't meet your criteria. You enter early because you expect the move. You hold through invalidations because you expect continuation. This is the habit that turns disciplined traders into gamblers, and gamblers do not last in the market. Professional traders do not expect movements, they observe them. They do not predict, they react. They do not hope, they accept. This mindset shift may sound simple, but it demands a complete rewiring of how you view the market. You must see price action without buy attachment. You must allow the market to reveal its intentions instead of trying to impose your expectations onto it. To break the habit of expectation, you must train yourself to think in probabilities instead of certainties. Every trade becomes a question, not a conclusion. If the market does this, I respond this way. If it does that, I respond another way. Trading becomes a series of conditional reactions, not emotional predictions. This is the mental structure that protects you from hope. It forces you to remain flexible. It forces you to remain objective. It forces you to remain honest. But honesty with yourself is the hardest part. You must admit when your bias is controlling you. You must admit when you're holding because you want to be right. You must admit when you're avoiding the stop loss because you don't want to confront the truth. Honesty takes courage, and most traders never develop it. They develop strategies. They develop technical skills, but they never develop psychological honesty. And without it, no strategy can save them. Expectation can even influence how you journal your trades. Many traders write journals to confirm their belief instead of confronting their mistakes. They record only the profitable patterns and ignore the flawed decisions. They write down what went right and forget to write down what expectation made them do wrong. But your journal is meant to expose your psychology. It's meant to reveal your weaknesses. It's meant to show you the patterns expectation pushes you into, those small decisions that become massive losses. Over time, expectation creates a trader who reacts emotionally, not strategically. And once emotion takes control, consistency becomes impossible. One day you're disciplined, the next day you're impulsive. One day you follow your rules, the next day you chase the market. One day you act like a professional, the next day you act like someone who's never seen a chart before. This inconsistency destroys confidence. And once confidence breaks, expectation grows even stronger. It becomes a cycle that traps traders for years. But the good news, the empowering truth, is that expectation can be unlearned. It can be replaced with awareness. It can be replaced with discipline. It can be replaced with a deeper understanding of the market. You can retrain your mind to detach from outcomes, to honor your plan, to accept what the market offers instead of demanding what you want. This shift changes everything. You stop fighting the market and start flowing with it. You stop clinging to fantasies and start following evidence. You stop relying on hope and start relying on skill. In the next part, we will bring everything together: the danger of hope, the psychology of expectation, and the transformation a trader must undergo to break free from emotional dependence on outcomes. We'll push toward the climax of this lesson, the point where you understand not just why expectation destroys traders, but how to build the mindset that makes you immune to it. Eventually, every trader reaches a point where they must confront the truth. The market is not dangerous because it moves unpredictably, but because the trader approaches it with expectations they cannot control. The danger never came from volatility, or from losing streaks, or from sudden reversals. It came from the internal belief that the market should behave according to your desires. When you finally understand this, your entire relationship with trading begins to shift. You stop blaming the environment and start examining the expectations you brought into it. Hope, the most seductive of all trading emotions, is the one that lingers longest. Even when you understand its danger logically, it hides itself in subtle ways. It sneaks into your trades as patience, as confidence, as conviction. It convinces you that holding on is strength, that enduring pain is noble, that the market will eventually reward your faith. But hope is not strength, it is surrender, disguised as determination. The market does not bow to your belief. It only reflects your discipline. Breaking free from hope requires a psychological rebirth. You must become the kind of trader who sees reality with brutal honesty. You must lose your attachment to outcomes. You must release the desperate need to be right. Hope thrives where ego is fragile. When your identity becomes tied to your trades, hope becomes your shield against discomfort. But the moment you separate your worth from your results, hope loses its power. You stop defending losing trades and start managing them. You stop dreaming about perfect setups and start executing your plan with clarity. You begin to understand that trading is not about predicting the future, it is about managing your behavior in the present. It is not about controlling price, it is about controlling yourself. When this realization settles into your mind, expectation fades, it loses its grip. You stop expecting the market to give you anything. You stop expecting trades to play out in a certain way. You stop expecting patterns to repeat perfectly. Instead, you observe, you adapt, you respond, you stay neutral. Neutrality is the highest psychological achievement a trader can attain. It is the state where you are unaffected by what you want, what you fear, or what you expect. You see the market as it is, not as you wish it to be. Every candle becomes information, not prediction. Every move becomes a question, not a promise. Every outcome becomes acceptable, because your identity is no longer attached to results. In neutrality, discipline becomes effortless, not because you lack emotion, but because emotion no longer dictates your decisions. When you detach from expectation, your performance becomes strikingly consistent. You follow your rules because they are the only truth you can rely on. You exit when your criteria tell you to exit, not when your emotions feel ready. You take profit based on logic, not on fantasies of what might come. You cut losses immediately, not because it feels good, but because it honors the one principle that will keep you alive: protect your capital at all costs. The market respects only those who respect themselves enough to act with discipline, even when the outcome is uncertain. Traders often ask why their breakthroughs come suddenly, after years of struggle. The answer is simple. They stop expecting the market to say yes. They stop hoping for easy wins. They stop waiting for the perfect setup that will change everything. And once hope is removed, clarity appears. They begin to see opportunities that were always there but were clouded by emotional interference. They begin to understand that the market is not an adversary, it is a mirror. It shows you who you are, what you fear, and what you need to overcome. The market reveals your weaknesses, not to punish you, but to mature you. A trader reborn without expectation is no longer controlled by outcomes. They become controlled by process. They rely on rules, on observation, on discipline. This is the trader who survives. This is the trader who grows. This is the trader who eventually thrives. But the ultimate transformation happens when you realize that trading without expectation does not mean trading without belief. It means believing in your plan more than in any individual trade. It means believing in discipline more than in emotion. It means believing in the long-term edge, not in the short-term illusion. When you build your conviction on structure instead of hope, on data instead of desire, the market cannot shake you. You become grounded. You become focused. You become untouchable. That is the mindset Jesse Livermore lived by. The mindset every consistently profitable trader eventually adopts. And the mindset this very video is meant to build within you. Expectation and hope will always try to return, because they are natural human tendencies. But in the market, nature must be tamed. Emotion must be restrained. Discipline must be cultivated deliberately, daily, relentlessly. Before we close, I want you to remember this. The market is not here to fulfill your expectations. It is here to reward your discipline. Hope is not a strategy. Expectation is not analysis. Desire is not confirmation. What will save you in this game is not wanting but accepting, not predicting but reacting, not expecting but preparing. And when the day comes that you trade without hoping, trade without forcing, trade without needing, you will finally understand what professional trading truly feels like. It is calm, it is clear, it is consistent, and it is free. If this message resonated with you, make sure you check out the other videos we've created. The psychology of confidence, greed versus patience, why discipline beats strategy, and all the others that build on this same foundation. Each one connects to this lesson, each one strengthens your mindset, and each one helps you remove another layer of the emotional weight you've been carrying. And when you're ready to go even deeper, dive into our podcast playlist. That's where we explore these concepts with the kind of detail, honesty, and real-world context that simply doesn't fit inside a single video. If this content is changing the way you think about trading, the podcast will take you even further. And remember, the market never owes you a single trade or a single move. Expectation and hope are invisible forces that quietly undermine your discipline, distort your judgment, and erode your consistency. The traders who succeed are not the ones who wish for perfect setups, they are the ones who master themselves first. They observe without attachment, act without hesitation, and follow their rules no matter what the market does. Free yourself from hope, detach from expectation, and trade with clarity, focus, and discipline, and you will finally see the results that emotion alone can never deliver.